Welcome back to Fast Market. I'm your host, Tom White, along with my co-host, Kevin Hinks. But let's bring in our next guest for a cash tag segment. It's going to be Landon Swan. He's a co-founder of LikeFolio. Welcome back to the show, Landon. Do we have Landon's audio here? We might not have that, but we're discussing Roku here, Landon. And it seems like they're still seeing some growth numbers out of viewership and the amount of revenue that they generate per viewer. But this stock's down over 75% so far in 2022. What kind of data do you have out of LikeFolio going into this earnings result? Because it seems like nobody's expecting anything to the upside, it looks like.
Yeah, you can count us in that group as well. We don't see a lot on the upside. I mean, we've got a ton of tailwinds for this company, right? I mean, you look at people talking about using smart TVs, that's up 90% year over year. Purchasing them is 30% year over year. Streaming, cutting the cord, everything that you would want is up on a year over year basis. The problem that we're seeing, though, is that it seems to be Roku's competition that's mostly taking advantage of this. So Roku's falling behind a little bit. They had a huge lead, but when you look at their competition, I mean, you're talking about Google, you're talking about Apple, Amazon. These are heavy hitters, and we've always talked about the fact that Roku's got a lead on the really big boys, but now we're starting to see that they're actually coming and closing the gap significantly. Roku hardware devices are losing about 12% year over year, whereas the other three are all on the positive side. Not hugely positive, but still positive. So we don't like to see that, obviously. Happiness, they're all pretty much in that same kind of category with Google, way up around 72 or 73%. So they've got the tailwinds, but they're not executing on that level. The one thing that they are executing on is the Roku channel. So this picture is more about the devices. If you look at the Roku channel mentions, that's where people are talking about actually using that channel, which is the heart of their advertising revenue. That's up significantly, up about 68% year over year, the highest quarter we've seen from them. It continues to grow, and I think that is likely the future of this company. There's some concern, after Facebook or Meta's and Google's reports recently, the ad revenues are coming down. People are spending less on advertising. So that's, if you're putting your eggs in this basket, if like Roku's doing, obviously that's not going to be great news. But there's still room to grow. There's the projection that by 2025, the connected TV ad spend is going to get up to $27 billion, but the traditional ad spend right now is $70. So this is the way that all advertising should be going. People are cutting the cords. They're moving on to streaming devices. So the pie is continuing to get bigger. The only bad news is that the big players are coming in and trying to gobble up pie. They're actually taking a little bit away from Roku right now. So with the stock off almost 90% from highs, you can argue that it's undervalued here. You could argue that the future may be a little bit dim compared to some of the competition that's coming in. So because of the tailwinds, I would like to see them executing better right now. They've fallen off a cliff, really, stock-wise. But with those tailwinds, I think they're going to get there. It's just a matter of holding on to what they've got and trying to fight off the competition, which is not small. Again, Google, Amazon, Apple, these are three companies that you don't really want to compete against, but Roku finds themselves in this unique position of trying to hold their ground against the big boys.
Yeah, Landon, some of the stories here are not great. The ad spend is not great. The competition with Alphabet and Meta and some of these other companies, the streamers, is not great. But Landon, I'm going to read you two quotes from one ex-CEO, Bob Iger of Disney. Linear TV, as we know it, is falling off a cliff. That's Bob Iger. Reed Hastings from Netflix. Linear TV is going down faster than we anticipated, the move from linear TV to streaming. Now, you're right. Short term, these companies may be going through a little bit of a lot of things in the air and waiting for some of this dust to settle. But the 18 to 49 demographic, which I'm just on the other side of, just by a couple days, Landon, is really moving away from linear TV and towards streaming. So the future for this company, yeah, there's competition. You'd expect that. But if this pie is getting so much bigger, Roku's going to have a spot in this fight, right?
Exactly. I think that's the argument. And for a long time, when the stock was up in the 400s and 450s, I think the argument was Roku is the spot, right? They had it all. And they got obviously a little bit ahead of themselves, investors did, when it came to the valuation of this company. And now you've got, we knew it was coming, but you've got these three big companies coming in with the Fire Stick, the Chromecast, Apple TV. You've got them coming in and trying to take as much as they can. Roku is a fantastic company. It does a fantastic job. They've pulled in viewers, but it's the competition that's going to be taking away from them. But overall, I 100% agree with you. 5-10 years from now, this market is going to be multiples of what it is today. So if they can even just hold on to the slice that they've got, they're going to be doing very well. I think the fear is that their competition is just going to push them out because it's three of the biggest, most well-executing companies in the world. So Roku's got this head start. But, we've seen when it comes to technology, there's not a lot of loyalty. People just want the best product. And if you can, build in gateways and ways to keep people connected like Apple has, then that's a little bit of a moat around your business. But other than that, people are quick to switch. And if you can provide a better service, they will switch. So Roku has to stay on top of it and continue to put out a premium product.
Yeah, and I think that's one of the things we always discussed about Roku, Landon, was, hey, linear TV is dying, just as Kevin mentioned with some of those comments, but at the same time, you still need some spot to aggregate all these things that you subscribe to, right? You mentioned the three big players, and if you look at the viewership data that you guys have for the fall of this year, we're seeing a spike higher, and then on your other chart, we're seeing the stock price severely lag maybe what your data points to. So is that, positive for the stock going into these results with the stock down nearly 80% so far this year?
Right. So it's a bit of there's two ways to look at Roku, right? There's the devices, like how many people are getting their hands on a Roku device. And that's either the little box, which is not so much anymore a big factor, or a TV that's got a Roku inside of it. That is extremely important because that's how people are going to get to their Roku channel, which is how they make money using advertising. That's the key. So on the one chart with the green line, you can see the devices are falling off a cliff or have fallen off a cliff. They flattened out. And on the scatter plot, you see that the other three companies are positive while Roku's negative. However, Roku is doing a good job of turning the customers that they do have into more and more views on their channel. So we're looking at the channel mentions of viewing are up about 70% year over year, which is fantastic. And on their last report, their active accounts are up 14% year over year. So people are actually watching more per person. There's more people watching as well. So they're growing on the Roku channel. The problem is that they're getting less of the pie on the devices, which lead to the channel down the road. So right now, I'm bullish on the company long term. I do love them at this price. I think this is a pretty low price, especially when you look at where they've been. I mean, we're almost 90% off all-time highs. Into this earnings report, the data's coming in fairly neutral. We're at a +8 earnings score, which is basically neutral. If anything, I would lean bullish, but I probably wouldn't put my money there just yet. I like this company long term. I just want to make sure that they can execute against these big three competitors.
Yeah, I think that's going to be, the call, the guidance moving forward as everybody's rolling out these ad-supported tiers. Now, the revenue generation for Roku on ad spend isn't that much of their overall revenue, but it has been growing. We'll see if that comes to an end because that pie, the digital ad spend pie right now has actually been falling also, as we've heard from some of the other streaming services out there. All right, great stuff as always, Landon. Appreciate it. Have a good day.
All right, thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data on Roku ahead of earnings.